All right, Caesar with Chatham Mortgage Partners, and I'm talking about the Fed's 0%, what it means for mortgages, and how obviously you still have a lot of talk with people talking about that 0%, and they're looking for that 0% for the mortgages. Unfortunately, it doesn't apply to mortgages. Mortgage rates are the most influenced by the bond market, and the bond market is most influenced by the Federal Reserve, aka the Fed. So when the Fed says it expects rates to be at zero, or at least until 2023, does the same go for mortgage rates? That would be nice, but unfortunately, that does not work. The Fed dropped its policy rate to 0% back in March, the same place it had been for nearly 6 years after the financial crisis. Mortgage rates were completely different. They worked completely different in territories during that time, and they've often moved in opposite directions since then. With this in mind, how can we say that the Fed is so important to the bond market and mortgage rate? First off, there's a clue in the chart above, which I'll post it. We can highlight time frames where the two rates moved in opposite directions. Not a coincidence that they generally move higher together, lower since then. Correlation is indeed much more reliable over such a long time frame, but for those interested in the here and the now, the Fed fund rate does little good. This is actually quite understandable given that the Fed fund rate governs overnight transactions between large financial institutions. That's a very different scenario than the 30-year fixed mortgages, as we know. Different scenarios and especially different time frames have a big impact on rates. So in this, pretty much we're asking about the 0% interest rate. They definitely need to look at what really the Fed fund rate focuses on. It doesn't focus on mortgage rates. It focuses on any personal loans, any student loans, any car loans, HELOCs, home equity lines of credit. Other than that, it doesn't focus on any more. So if anybody has a question regarding to what rates are doing right now in this market, depending on your scenario, every situation, every scenario is different, just like every credit report. If you guys have any questions, feel free to reach out to me, send out your scenario, and I can definitely send you out a free mortgage analysis to see where you're at today. Thank you so much.